Good morning. It is June 1st. We've got some pretty big price action going on after the morning news that came out here. If we just pull up the economic table and we look here, we can see all the news that came out for the US market right here. And looking at the numbers across the board, everything was negative. The non-farm payrolls, which everybody is really looking at, clearly disappointed. The market is down very sharply. We're seeing some money move into the safe haven gold. Silver is not really seeing a lift at all. It's mostly gold being seen as the real safe haven right now, and silver has yet to play any catch up. It just continues to trade relatively flat. But overall, all of these poor numbers below estimates are very negative on the market. We're seeing everything trade down very sharply this morning. And let's just kind of run back and take a look at what's kind of unfolding here. Looking at the US dollar index, you can see we're within this big range. We've been working under this green trend line several weeks ago, and really it hasn't left that level. It just continues to climb right up that very steep level towards our major resistance zone. This morning, if we zoom in, you can see we've made new highs. We're grinding higher. We're back above that line. I wouldn't be surprised we just keep crossing it more or less, but because it is a very steep line, it does need little pullbacks along the way. But overall, we just continue to march straight up that line. Stronger dollar means weaker stocks and commodities, and until we see the US dollar roll over really hard and show signs that it's going to have a sharp drop and then possibly continue lower, we're not going to see stocks and commodities probably put in a bottom at this time. We're going to see them continue to be under pressure. So with all that negative news, we're still seeing the dollar. It's not up as much as I thought it would be. Really, money isn't moving that much into the US dollar as a safe haven because this was poor US economic news, but money's actually going into gold this morning as more of the safe haven. But either way, we're seeing the dollar and gold start to move up together here. Looking at commodities, if we take a look at crude oil, all the commodities have been in a downtrend for a while, and they have yet to find a bottom. Crude oil down huge today. It's down about 4%, down at 82.98, and it's just picking up speed. Likely next stop will probably be the 80, which is through this bottom here. Let's just zoom in a little bit more. Just zoom in a little bit. You can see here we've got this double bottom here. We've got a consolidation right through here, all the way through these tops. So 80 will act as a pretty good support zone simply because it has more connecting tops and bottoms to it. It's also a whole number. Whole numbers are very important. Usually you'll find big money players and a lot of traders and investors say, I want to buy it at 80 and I want to sell it at 100, which are why you got all these key solid numbers here. These whole numbers become support and resistance. Crude oil was looking a little bit oversold. It had slowed down on the intraday chart, so it had time to regroup, which is a couple we had a side candle here more or less, and now it's really gone right back into extreme oversold situation, and we're coming down into a pretty key support zone. It is yet to form any bottoming pattern. Today it looks as though it's going into extreme kind of oversold pattern, which usually has some type of bounce, but overall until we get a bottoming pattern, we're not looking to get long crude oil. It's best to just let the trend play out until we see a reversal at a support zone, which I felt as though we were starting to get into one yesterday. We came into these pivot lows and pivot highs, but never formed any type of bullish pattern. It had a bounce yesterday, but then sold right back down, and so we never looked to get long. And this morning it's getting hammered with the very poor economic news this morning and the rising dollar. Looking at natural gas, just want to pull this up. Natural gas is down 3.5% this morning, continuing to extend. It's got big volume already this morning. Short selling is starting to jump on and pick up speed. It is trading, if we just zoom in a little bit here, it is trading down at a little bit of a support zone. We've got this cluster, and we've got a couple pivot lows in here. So we are coming down on natural gas where we could get some type of a bounce. It is a little oversold. It's down about 5, 10, about 12, 15%, somewhere. Usually after a fall that big, we get some type of bounce. Not saying to pick a bottom. Definitely need to find some type of bottoming basing formation before you look for a pop in price. Overall, the trend, in my opinion, in crude oil and natural gas are still down. The long term, we haven't yet to really break any of these previous highs. We broke this little one here, but really this here was a bounce level going down, and you can see we're still at a lower high and likely to go back down and test these lows and possibly go even further. Looking at gold, here is the gold chart. I pointed this out yesterday. Again, these are all the 4-hour charts, or this is the 4-hour chart. We've got the move down, we've got this consolidation through here. You can see gold picking up some steam this morning up through that resistance level, so pretty strong volume. Again, this is a lot of economic news that hit that was negative, so we are seeing a big jump. You got to keep in mind though, moves that happen that go straight up on news, they can very easily within the same day or over a couple days come straight back down again. It is a knee-jerk reaction. It's an emotional play. So really, if this is going to start to head up, we'd like to see it start to form a base. You know, it's got to break a couple of these pivot highs, work through the 1600 area, and then from there, as it starts to move higher, it'd be more of a long play. But overall, the trend is still down in the in gold and silver. Looking at GDX. GDX is having a nice bounce this morning. It's up in pre-market, obviously moving up with gold. It's got a nice little bull flag. I pointed this out yesterday that over the whole market, the gold miners is the strongest looking sector. Utilities are doing very well also. We've got this nice kind of recovery, got a little bit of a bull flag forming. It's at the top, near the top of its range. And again, if gold continues to break out, we may see gold miners start to head up with it. But we've got to keep in mind that a falling market will pull, 3 out of 4 boats down. So we got to be cautious. This could still continue to break up, but being long stocks in a bear market is generally not the best play. I would be more inclined to stick with actual gold, physical gold ETF, as opposed to stocks. Or you could obviously do a mix of both. But here's silver. Here's a silver chart. You can see we're still in a downtrend. Silver's having made a new low this morning. Tested almost this little pivot low back here. Starting to move up a bit now. It was actually flat about 10 minutes ago, but it's starting to move up. Overall, still in a downtrend. Not looking to pick a bottom in anything here at this time. Bonds have seen the big move that we kind of started to anticipate. We had this breakout of these previous highs right across here. From there we had the run, we had the bull flag. From there you get a measured move. We were looking at a 1-2, about a 3% surge, and from this breakout we have had about a 1, 2, 2.5. So target is about 6.5. We're starting to get up there before it probably starts to top out and form possibly another flag. But we pretty much came up and almost reached that target already. Huge move up in bonds this morning. They're up over 1.5%, I think, and really keeping our eyes on what's going on here. Money just continues to flow out of the equities market and into bonds. Looking at the SP 500, I'll just pull up the daily chart first. This doesn't show today's price action. This is the SPY ETF. You can see where we stand in the grand scheme of things. It's kind of a messy chart. There's a lot of stuff on it. But what we're looking at here is we're in a we broke down below this support level here, this pennant formation. So we had a leg down. Then we had this bear flag coming up, which happened on lighter volume. We got into resistance, took a short position. We took a short position once everybody right here piled into the move. We saw the shorts get shaken out. Market started to move down. We saw some panic selling yesterday, which indicated we need to take some, or the past 2 days really, we need to take some profits off the table, as it could actually put in a strong bounce. But overall, the main play is to stick with the trend. So what we did was more or less scalp and trim some profits off and moved our stop down. And yesterday we continued to see the market move a little bit lower. Doing this simple measured move here, we're looking at, let me just change the percentage to the side scale to percentage. We just look at this and we look for a downward move. We'd be looking for a 2, 4, 6% move down. So from this high, we'd be looking for more or less 2, 4, 6. So from the looks of it, we've got about another 3% drop to go. Another 4% drop to go. In pre-market, we're already down 2%. We're already trading down here. I'll show you on the futures market. We're down huge this morning on the equities market. Dow's down over 200. SP 500, it's down 2% right now. Overall, we've got this bear flag, and measured move is showing us to sell off for still another 3 to 6% really from here, depending on how strong panic selling gets going. Looking at the futures markets, you can see what's been unfolding overnight. Here is our multi-month chart. This is a 30-minute chart, so you can see all the price action, and you can see this is where we came up. We sold it right up here, and we got this strong move down. Let's just zoom in so you can see the full price action of the last couple trading sessions. And you can see here, yes, this is yesterday's trading hours and futures, regular trading hours. We had that strong dip in the morning, saw a strong jump in the afternoon. Somebody was trying to run the previous day's high. They never quite made it, thank goodness. But they really, looked like a buy program stepped in. It was just buying everything up. It literally stopped for a while, congested, and then the buy program stepped right back in. Watching the time and sales, it was just somebody hammering the market, just trying to get as many shares, trying to run it up. And they wanted to break this morning's session's highs. Once they break that, then traders become bullish. It runs the shorts, and then they wanted to push it higher going into the close, which they did. But overall, the herd was very bearish on the market, and they overcame it at the close and closed down fairly strong on some very strong volume. In futures trading last night and this morning, we saw the market closed right about here. Futures trading right after the close, we saw prices drop straight down, had a little bit of a bear flag, stair-stepped its way down again. Early this morning, formed another bear flag, headed back lower again. Another little pause, and now we're down here. And looking at the SP 500 futures, we're down about 1.85%. We're having a little bit of a quick bounce here. We are way oversold. I wouldn't be surprised if the market opens back up somewhere up around maybe even the 13. It's very volatile this morning. Now the key thing here with the SP 500, with the broad market overall, doesn't matter which index you look at, we've broken some key support levels. We're below the 1300, which acted as support yesterday and through the night. Once that broke, all hell broke loose, and a lot of stops were run, and the market really started to pick up speed with the bad economic news this morning. So if we do come back up this morning, we're probably going to come up, maybe even spike a little bit above the 1300 mark, but this is going to be the more or less sand in the line in the sand for the day where we close. If we close below 1300, it's going to be very bearish. Wouldn't be surprised if we see much sharper sell-off going forward, continuing a few more sessions. Anyways, that's it for this morning, and I'll talk to you in a little bit. Bye-bye.